Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having snapped back from the base of around 64 cents, the Australian dollar is now staging a slightly firmer start to the new week. This move comes despite the volatile swings seen in the US dollar index by factors such as the US presidential election and expectations of a Fed interest rate cut shifted from December and now looking on to 2025. Looking ahead to this week's key economic events, Australia's CPI will be closely watched along with the RBA Governor Michelle Bullock's speech, which may shed light on policy direction. We also get update from China's manufacturing and non-manufacturing PMI, and also we get the RBNZ rate decision, which anticipates a cut to 4.25. While in the US, the FOMC minutes will keep traders very busy, along with the GDP and the core PCE, the Federal Reserve's preferred inflation gauge. So with the technicals firming up, I like the way this pattern is unfolding, and a break beyond 65.40.45 could see a move on to 66 cents and reassess from there. With any pullback, I anticipate to be shallow. The euro dollar experienced significant volatility on Friday, initially plunging below the 103.75 support level before finding support and breaking back above the channel line. The surge in the US dollar, driven, as I mentioned, by factors of the US presidential election and expectations of a possible pause in Fed cuts, driving the US dollar index to a high of 108.06 on Thursday before paring back of its November highs of 2022 and now settled this morning at 106.88. So looking at the technicals, I feel the market is a little bit more to the bullish side, and a break back above this channel here would see further scope on towards the region of 105.5 to 106 and reassess from there. Given the 4 days of heaviness, I feel it's time now for a rebound. Looking at dollar yen, well, the market is now breaking down further, given the fact that this broad trend line has buckled, and with the technicals also gives in favour of a move towards the region of 152.50.60. Around there may see some profit taking, but nevertheless, this given drive that we've been seeing recently, along with the engulfing candle to the bearish case, does add further pressure on the support. So let's see if the market can continue on into this week. Posting its 8th consecutive bearish week, the market is finding a little bit more to the support side, given the fact that there is little until around 123.60. There is still a bit more risk I see to the downside, but we do need to see this current rebound continue. And if we do see a break above the region, 126.15 could see further scope on towards 127 and reassess. Spot gold continues to show strength, reclaiming the 2,700, driven by heightened geopolitical uncertainty from the ongoing Russia-Ukraine conflict. The surge in demand for safe haven assets comes despite the volatile swings we've seen in the US dollar. And with this week's economic events, as I mentioned, being the FOMC minutes and the GDP in the US and core PCE, could see a little bit more to the whipsideness. But nevertheless, I feel the market, since reclaiming that 2,700, could head on to 2,750 or even up towards this trend line, somewhere around 2,770 to 2,800. Any pullback, well, the market is likely to find support around the region of 2,695. Wrapping up with oil, the market is somewhat bullish now. It's cleared that $70 mark and looks on towards $72 as a potential target and reassess from there, just in case we see a bit of profit taking like we saw previously. Any pullback likely to be shadow, with the support seen now around 69.60. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.